Good morning, everyone. So I've been kind of just hunting the charts this morning, kind of waiting for what I wanted to see, something interesting to take a position in. But I am noticing the consolidation has a 9:30 open. It's that gray area. And we're also in a bigger consolidation here. So I want to see a run on buy side liquidity potentially today. And 9:30 did open up, and we are making this sort of shoot a swing beneath the short-term low. So I would have maybe I want to see like bodies close more, or the wicks at least go a little bit further than just a short sweep. It can continue going lower. Oh well, yeah, like that. That would have been actually optimal time to buy. Now I'm going to measure. It doesn't have to come all the way down. I think that was news, the PMI or whatever. But I'm going to mark out 50% of that wick. Let's see the hourly chart. Is that actually? No, it's probably better if I mark this out instead. And it might actually run the low. But there's still, in my opinion, I don't like the relative equal highs up here. It's too smooth, and I want to make a run up there. What I would like to see on the 5-minute chart is a small candle form, and then that could be used as an order block. It may also just leave a long wick and then space away. It doesn't need to get beneath this low, because I think we've taken enough of these relative equal lows from 6 a.m. to 9 a.m. So it doesn't have to get down here. It can. Let's wait until another 5-minute candle prints though, unless we start to see a lot of movement higher. But I have my higher time frame PD array to support trade bias. So from a 5-minute chart, I don't want to go into a 1-minute chart and start taking anything, or 30-second chart, 15-second chart, right? I'm still waiting for more evidence that we are going to go higher right now, right? There's nothing that tells me it's going to go higher right now. Again, I want to wait till this 5-minute candle closes, and I want to see how the next one trades. That's how I'm going to try and in the next one, I want to see if it can be an order block, depending on how it trades. We do have 10 o'clock news. That's something. Forgot about existing home sales. So definitely not looking for anything until 10 o'clock. But I don't like how much distance it's leaving between this low. So now with how much lower it's going, unless it, I mean, you could always can start consolidating, and with 10 o'clock news, it might start to reverse. But I don't know. It seems to have really drawn lower here. So I would want it to kind of stop here and then consolidate a little bit, and then set up for the higher move. All I'm waiting for is just like a small 5-minute candle to print to use as an order block or a breaker, or consecutive up close candles to print to use as breakers. What the? Oh. Hmm. Oh, fuck. Alright. So price 5 minute candle is about to close. And we've went against this previous candle. So it looks like it's actually forming an order block. If we're gonna close above that 950 candle, I would like to consider that an order block. But we do have 10 o'clock news coming out in like 4 seconds there, so could happen is this might be a breaker and we could see one more run because this is like too clean. It's just like too much of a clean reversal in my opinion. I wouldn't trust coming back down, and it could work. It could come back down these fair value gaps. I could be inversing this fair value gap, and it could be supporting the price and sending it higher to my target of the buy side liquidity here. For sure it could work, but I'd rather not. Like I'd rather wait and see until really I know I'm more certain that everyone's been taken out of the market, because I know there's people that may just be buying this breakout, this small reversal, and the algorithm may look to run back beneath these lows. Like it should look to go back beneath those lows. Because usually we're not just gonna reverse like this. We're gonna come down and then go like that. Or leave that short term low. Or we're gonna come down, consolidate, and then go like that. So this could just be a retracement. On the 4 hour chart, I marked this level. Even though we have those relative equal highs up top that look too clean, it's possible when we come up here we see a little bit of rejection. It is an order block, but if you're looking for order blocks on a 4 hour time frame, you go from the discount premium, right? This is basically in every case except for if you use in that range, but if you use in the overall range, this is down to premium. So I really do think that it's more likely that we see a run on short-term stops like that buy side or that high there back to midnight open today, or this could even be next week. It could keep consolidating today, right? Because we've dropped so much on Thursday. We haven't had a chance since Thursday at 2 a.m. to take out any sellers. So we need to take some people out, is the way I'm looking at it. Sounds pretty evil, but yeah, it is what it is. Wait, I don't know why I even have that on my chart. It's just Yeah, so let's watch and see. Like I'm still going to pretend like as if I tried to trade long here. So let's take let's pretend like we're taking this inverse. Maybe use a better one on the 4 minute. Yeah. And like this order block's about to form, and this could be a long here. Probably try and get filled around there. Like I don't expect this to work. It's too clean. There isn't enough consolidation for me to trust it, or enough manipulation for me to trust it. On the S&P, sometimes this helps, but yeah, the Dow is up. So if it like if I'm trying to trade higher, if I want to trade higher and get into buys, because as you can see, the Dow is, just by looking at it, the slower asset. It usually just has more industry companies like Coca-Cola, for example, that just kind of produce things more. Tech is the fast-moving stocks, the big market caps, the ones that are very volatile, that change often. So not, the Dow is always a slower market. It's usually always going to follow the Nasdaq. S&P is always about in the middle, kind of between the two. So the fact that the Dow is higher, I mean, it's been like that often. I wouldn't want to go long on the Nasdaq because it seems to be leading, right? However, if we were going to go lower, then yeah, I could wait till the Dow stops going higher, and then that would increase the odds, or increase the runs lower on the Nasdaq. But because the Dow's already going higher, it's just like the Nasdaq would just be, right now they're basically just fighting, and Nasdaq's always going to win. So unless Nasdaq starts to go higher, it would just send the Dow a lot higher, but it would just be the leading asset. So I often just don't like it when the Dow leads. I find that it's trades are a lot less likely to pan out when the Dow's the one that's leading. But with the S&P, the S&P looks a little better. But like we do have, we got a nice fair value gap there that price traded into. We do have a little bit of consolidation. It seems like we failed to make a run beneath that low, but the Nasdaq is just too clean. So I'm staying out of this and choosing not to take it. Yeah, it would have already worked for 20 points. What we can do is we can always consolidate up here, run beneath this, not necessarily get down to this low, but just run beneath a new consolidation around here and then go higher. I'm reading the news down here, bottom right. Like, why do they say these things? Like, why? Was it a muted open? Damn. Was it a quiet open? No. Oh, hold on. How much did it drop by? 114 points. 0.5%. That's sometimes the whole daily range. It was not a quiet open. The market really believes that the news that come out, that investors they wait for these releases to come out as if they don't know what they already are, and then that's when everyone gets into the market and they start to make decisions, and that pushes price up and down. What happened when the business well, it was probably PMI they're talking about. It's medium impact news, so it doesn't show when I filter high impact. It's probably manufacturing PMI they're talking about. So do you think at 9:45 people all of a sudden started? No, like it had already started dropping, and it just, I was already looking for lower prices, and it continued lower prices or support at this area. So it's basically just small amount. The news have nothing to do with where price is gonna go short term, and maybe long term. Like interest rates definitely have an influence on price in every market, but the intraday moves that occur from these news releases, 100%, it has nothing to do with what people think the news is saying. It's all about what the algorithm is saying. The algorithm is going to submit to the bigger orders, which are like the central banks, and they're not placing orders as soon as the news come out. The news just serve as an excuse for price to move, to be volatile, to efficiently trade price so that orders can be filled for these bigger players. That's it. So cover up. I had a trader that asked me the other day if he needs to keep up with what's happening in the economy with all the news. And, well, I admit it's fun to do so. I think traders should, right? But you don't really need to. I mean, I enjoy seeing monetary policy kind of like building the narrative of exactly what they're doing and how it's affecting the markets. I like to relate those things, but with my analysis, but it's not necessary. In fact, I would say that, in my opinion, since I've tried to look more at the news and what the news is saying, I've actually found little correlation with my analysis. It's always like too hard to say how it's going to impact the market, and I'm just doing it simply as a hobby. But you could just, at the beginning of the week, just look at the economic calendar, mark down the days there's high impact news, and then just build your trading around that. You don't need to look at what they are. You don't need to look at what people think they will be. Just know when there's going to be high impact news. That's it. Don't even need to know the name of the news. Just, yeah, that's it. So I didn't quite reach there. This trade would have worked if I had long down here, and I'm not surprised it worked. I'm not disappointed it worked, but I chose to stay out of it because I didn't like it, and that's good. That's responsible. But now I probably will get off because I wanted to for sure be done before 10:30, and I know that I will probably stay on for another 15 minutes. So I want to start to kind of, I'm getting ready to leave the chart because I need to leave soon. And I don't think that there's going to be another great opportunity. We're already kind of making the run higher, so I mean, there's this 15-minute bearish fair value gap, and the order block I said could provide a little bit of rejection. So I want to see. We're gonna form this order block on the 15-minute chart there, and I want to see if it's gonna play around, maybe make an attempt lower. So like, if I'm thinking about ICT traders and retail traders, I want to go short. You have the 50% here. Price drew above the 50% into this breakaway gap. There's another breakaway gap up here too. That had not been traded to. And then there's that one there. So it's possible that a lot of traders are thinking it's going to go lower. And so now you can kind of see that if we get a move lower, we're going to maybe leave some bearish fair value gaps. And then it might work for a little bit, but I would expect it to turn and then go higher. And the Dow is still going higher. It's starting to stall a little bit, but really ugly. This is ugly. A child no one wants. The absolute worst. I mean, I've seen the Dow move really nicely sometimes, but this is. I mean, yesterday was not bad, but most of the time, this is just horrendous. I mean, I'm glad the dollar's finally going higher too, because you'll find that when dollar consolidates, you usually have harder time trading other assets. When the dollar is trending, it picks a direction, then it's usually a lot easier to see sustained runs in the opposing direction on whatever's priced in dollars, right? Because the dollar strengthening means other currencies and other assets go down. So you look at the euros going lower, and the lower euro, the lower foreign currencies are, well, what they're doing right now is with the devaluing currency, they're going to have to pay more for imports because the US dollars can be strengthened with these lower currencies. So imports into the US will cost more money to import from the US, which means that inflation is going to go up, and so they're going to have to drop the rates. Well, they're dropping the rates already because the dollar is just too strong, and there's already too much inflation. So dropping the dollar will just create more expensive imports. Dropping the rates will create more expensive imports. Therefore, you're going to see that they're going to have to drop rates very quickly. Some of the countries, at least. I think Canada might be one of them. They're going to have to drop rates really quickly. It would cause a recession in some places, for sure. I think right now we're entering a global recession. So pay attention to foreign currencies because things might get bad soon. What is the GFK conference? Oh, is if the other countries all drop their interest rates, that strengthens the dollar. It's the exact same thing as if the United States had just raised their interest rates, so that borrowing is now more expensive, and it just costs more to borrow in US dollars and to loan in US dollars, which would also push up inflation in other countries. So when the United States raises the interest rates, it's bad. Other countries need to raise their interest rates so that they can curb spending. But then it comes to a point where people can't afford anything, so then they need to drop the rates very rapidly, which is why it's usually not good when the United States raises the interest rates for other countries, except for the investors. The countries will get a higher return for buying the bonds of the US dollar, which will just push up the demand for US dollars even more than it already is, because they're going to need more US dollars to pay off their debt, since now there's a higher interest rate on that debt. So this is all playing in the United States' favor, but it's going to cause a lot of recessions, especially in Canada. I think it's going to be a big recession. So when we see all these other central banks, like the Bank of Switzerland, right, I think just cut twice, and then Bank of Canada cut a couple weeks ago, a lot of people are thinking, well, the Federal Reserve is next. Anyone that says that is stupid and doesn't understand that it's because there's a global recession starting. All these other banks are starting to cut. And I probably explained it poorly, but there's other people that will say it a lot better. But yeah, we are entering a global recession. It's going to cause a lot of bad stuff, and a lot of currencies are going to get hurt. So it's going to be a very big summer. Like, a lot of people were saying, especially ICT, saying it's going to be a big summer and stuff. And I'm usually like, okay, well, I need to see first. I'm not just going to take your word for it. Well, now I believe them, because I'm seeing the central banks are starting to cut. And the United States will not cut rates. If the United States doesn't cut rate, then it's a global recession. And why? Because which one is riskier to hold? Europe bonds, Canadian bonds, or US dollar bonds? So obviously US dollar, because they can just print as much money as they want, since there's so much demand for them, and there's so much debt in United States dollars that's why there's so much demand for United States dollars. So with all that debt the United States dollars has, they're very safe, and so you'd expect to have their bonds to have a lower rate of return than the other countries, which are riskier, right? And if you're buying a riskier asset, you're expecting a bigger payoff than the safer asset. However, it's not the case in a lot of places, because right now the Bank of Canada, for example, is starting to drop their rates. Other countries are going to start to drop their rates. But if you see the Federal Reserve, they're not dropping the rates, you know something is off. You know something doesn't make sense. You know that these other countries are only dropping the rates because they have no choice, and they only do that when they're in a recession, so that spending can become cheaper. It devalues their currency extremely, and it will just strengthen the US dollar even more. And that's a very terrible thing to do, in my opinion, but it is the way the world works. It is the way the United States are going to stay in power. Okay, so we're kind of coming back to that consolidation. And if we start to get to close around that consolidation, maybe even get back beneath this level, I would be interested in looking for longs. I'm not looking for shorts yet. I know it could work, so I'm not gonna try and go against my bias. Instead, I'm gonna wait to see an inverse or value gap form lower here if we continue going lower. I'm tempted to long here, but I'm gonna wait till it closes. Thing is, if it comes up in the fair value gap and it closes above it, or this one here, I like wouldn't really like it because there'd be a wide stop loss to this low. It'd be like 30 points, and I like to have them at 15 points. So I would want to see it come down a little bit more, but I really have to go soon. I'm gonna play basketball and have to study all day at the place I play basketball too afterwards. So I want to leave a little bit early so I have plenty of time to study. See, I'm kind of wanting to go long, and you heard me obviously typing. I'm in Discord because I'm about to leave. So I'm just kind of checking out what people think, and a lot of people are thinking shorts. Some people were thinking longs. I think this is going to be seek and destroy, and it's not going to, like, I want to see, because between M and Q M, right, we have a contract change. Oh, we already changed the contract. So usually in the last hour, people roll over their, or in the afternoon, people roll over their positions. Once price kind of settles down after the 9:30 open, people, I guess, take the time to reevaluate everything, and then they roll over their positions. So contract week's always volatile. People will start to sell their positions. And that's probably why we started to see it go down on Thursday after the holiday on Wednesday. And then when that contract expires, which it did already, people go back into the market. That could push price up, but I'm also thinking that if people maybe are net short, like the commercials, and they want to go back in to lower trades, then it's maybe it'll get pushed lower and we'll have a deeper retracement. I don't know. I think right now it's seek and destroy. That's all I'm going for. I prefer longs, obviously, because we've taken out the low. We're beneath midnight open. We have relatively equal highs up here, but it's just hard for me to trust anything right now, simply because of that volatility that I know should present itself in the last hour when the institutions and hedge funds and commercials start to roll over their positions during the afternoon, and I'd wait for that. Like, we already saw a big run with 9:30, and we came back into it, and then we're back now into this. So yeah, I don't know. It's hard for me to trust going long right here. But if I had to pick a direction, it would be long. Like, I would be entering a trade here, or something like that. And yeah. I'm just screenshotting my chart for reference for later. I want to start doing that more, screenshotting my charts like before the morning opens and all that, because that will serve me well to look back on and say, okay, at the time this is how my chart looked, and I'll remember exactly what I was thinking based on how the current candles were. Tanja is in a long. Apparently, she is. I don't know what she's taking. Like, well, I don't know. She's in a long. Something that I kind of thought of taking. So maybe it works, maybe it doesn't. I mean, I wouldn't be taking anything because Seek and Destroy. But yeah, I was basically telling the Discord that if I am, then she's going long in her whole comment section. Is saying one guy said they are going for a short. Next comment, the market is bearish, and then another comment after that said Tanja, it's Friday, should be enough. And then the comment after that said all caps, you are my liquidity. Another guy said Tanja just closed, it's going down. Another guy said I went short at that gap. One guy said higher time frame says down. So like yeah, like nothing in the higher time frame tells me that we're going up yet because we're rejecting the up close candles that I highlighted ahead of time. And so, but we are in a discount, and we have taken sell side liquidity. We have taken the previous day low and then taken more sell side liquidity. So to keep seeing more runs lower, it's like we're going to be building this trend, right? And whenever we start to build this trend, it gets harder and harder to keep trading in this trend because there just is more and more liquidity. So to see continued runs lower, like all these people telling Tanja, yeah, it's gonna go down, it could, but it's a lot harder for it to go down, and because a lot of the volatility, in my opinion, will be reserved, and it should have probably ran by now if it hadn't. If it's still not running, so it's probably just gonna very slowly get up here, or consolidate, may even come back to low, but most of the volatility will be kept for the afternoon, where I'd expect to run these buy stops. But I would not be trusting lower prices. So a lot of people have strong opinions of going lower, especially ICT traders. And when majority has an opinion, I mean, it's just the way it is. It usually just doesn't work. Anyways, I'm gonna get off. I have to run to the gym. And yeah, that's all. Have a good day. Good luck.